Banking and financial institutions. Introduction. Imagine you have just received your first paycheck, a scholarship allowance, or profit from your small business. What do you do with it? Do you keep it under your pillow, give it to a relative for safekeeping, or open a bank account? For many young people globally, especially in developing regions, the idea of using a bank or financial institution is either intimidating, unfamiliar, or seems unnecessary. Yet, banking and financial institutions are the backbone of personal finance, entrepreneurship, and economic growth. In this module, we will explore what financial institutions are, why they matter, and how young leaders can use them not just for personal benefit but also to empower schools and communities with financial literacy. By the end, you should understand the types of financial institutions and what services they offer. How to open and manage a bank account effectively. The role of digital banking and mobile wallets in today's world. How young leaders can teach and simplify banking concepts in schools. Section 1. Understanding financial institutions. A financial institution is any organization that deals with money, whether it is helping you save, borrow, transfer, or invest it. These institutions exist in every country and play a crucial role in how money flows in society. 1.1 Types of financial institutions. Here are the main types relevant to young people. Commercial banks. The most common institutions, e.g., Bank of America, Barclays, Ecobank, ICICI Bank, Access Bank, offer accounts, loans, savings, credit cards, and financial advice. They are heavily regulated by governments to ensure trust and stability. Microfinance institutions, MFIs, provide small loans, microloans, and savings options to low-income earners and small entrepreneurs. Useful for rural communities and youth who cannot access commercial banks. Credit unions and cooperatives. Community-owned financial institutions. Members save together and can borrow at lower interest rates. Promote trust, inclusion, and collective growth. Development and investment banks. Provide long-term capital for infrastructure, businesses, or startups. Not always directly accessible for individuals, but important for national development. Digital-only banks and fintechs. Banks that exist only online, e.g., Chime, Monzo, Flutterwave, Paystack. They are fast, convenient, and popular with young people. 1.2 Why financial institutions matter. For individuals. Safe storage of money, better than under your bed. Easy access to loans, investment, and financial planning. Building a credit history for future opportunities. For communities. Mobilizing savings to fund businesses and infrastructure. Reducing poverty through microloans and financial inclusion. Providing financial literacy resources. For young leaders. Learning how money systems work to teach others. Gaining credibility when leading financial literacy initiatives. Accessing funds for entrepreneurship or community projects. Section 2. Opening and managing bank accounts. Many young people hesitate to open a bank account because they think it is complicated, expensive, or only for the rich. The truth is anyone can start small. 2.1 Steps to open a bank account. Choose the right bank. Compare account fees, accessibility, branches or ATMs, mobile banking, and customer service. Prepare documentation, varies globally, but usually includes national ID or passport, proof of address, utility bill, tenancy agreement, etc. Passport-sized photos. In some countries, references or guarantors are required. Initial deposit. Some accounts require a minimum deposit, while others offer zero balance accounts for students or youth. Understand account options. Savings accounts, earn interest, good for long-term goals. Current/checking accounts, useful for daily transactions, businesses, and payments. Student accounts, often fee-free and with extra benefits. 2.2 Managing a bank account. Opening an account is just the beginning, managing it wisely is the real skill. Track your transactions. Regularly check statements to avoid fraud or overdrafts. Use mobile apps for real-time alerts. Avoid unnecessary fees. No charges for ATM withdrawals, overdrafts, and transfers. Use your bank's ATMs instead of third-party ones if possible. Set savings goals. Automate transfers to a savings account. Example, save 10% of every income into a separate future fund. Protect your account. Use strong passwords, avoid sharing PINs, and beware of scams. Enable two-factor authentication, 2FA, for online banking. Build a relationship with your bank. Attend workshops or financial literacy events they organize. Ask for advice on loans, investments, and credit opportunities. Section 3, Mobile Banking and Digital Wallets. Young people today live in a digital-first world. For many, the first experience with financial institutions is not a traditional bank but mobile money or fintech apps. 3.1 What is mobile banking? Banking services offered through smartphones, tablets, or USSD codes. Examples, M-Pesa, Kenya, GCash, Philippines, Venmo, USA, Alipay, China. 3.2 What is a digital wallet? A virtual wallet, on your phone or online, that stores money and allows payments. Examples, PayPal, Cash App, Apple Pay, Google Pay, MTN Mobile Money. 3.3 Advantages for young people. Accessibility, no need for physical bank branches. Convenience, 24/7 access to your money. Inclusivity, helps the unbanked population participate in the economy. Entrepreneurship, young business owners can receive payments instantly. 3.4 Risks and how to stay safe. Fraud and scams, avoid clicking unknown links. Overspending, digital payments feel invisible. Track your expenses. Data privacy, only use secure apps with strong reputations. Section 4, Global Perspective on Banking and Youth. 4.1 Developed countries. Most youth already have bank accounts. Focus is on credit scores, investment accounts, and digital banking. 4.2 Developing countries. Many youth are unbanked due to lack of access or trust in institutions. Mobile money is often more popular than traditional banking. 4.3 Opportunities for young leaders. Teach rural students how to open accounts. Encourage digital literacy to access online financial services. Advocate for financial inclusion policies and governments. Section 5, Practical Exercises. Personal Action Plan. Research 3 banks in your country and compare their youth accounts. Open a student/youth account if you don't already have one. Classroom demonstration. Teach students how to fill out a bank account form. Simulate a mock bank activity where students role-play as tellers, customers, and managers. Community project. Organize a financial literacy campaign teaching parents and youth how to use mobile money securely. Invite a bank officer to a school to explain account opening. Section 6, Case Studies of Young People. Aisha, 22, Kenya, used M-Pesa to run her small cosmetics business, later transitioned to a full bank account to access bigger loans. Carlos, 19, Brazil, opened a student account with zero fees, learned to save part of his scholarship, and started investing in low-risk mutual funds. Ravi, 27, India, started with a cooperative bank loan, expanded his family farm, and now mentors rural youth on financial literacy. Section 7, Teaching banking and financial institutions in schools, coffee clubs. As a financial literacy leader, you can help students understand the role of banks in daily life. How to open a savings account step by step. Safe use of mobile wallets. Why financial institutions reduce poverty. Use games, mock ATM withdrawals. Visual aids, bank cards, savings passbooks. Guest speakers, local bank managers. Conclusion. Banking and financial institutions are not just for the rich or educated, they are for everyone, including young people starting their financial journeys. For you as a future leader, understanding these institutions will empower you to manage your money wisely, grow your career, and inspire others. When you teach students in schools, remember, A bank account is more than a piece of plastic, it's a gateway to financial freedom, security, and opportunity. By guiding the next generation to trust and use financial institutions responsibly, you will play a part in building stronger communities and reducing poverty globally.